Really great panel here, lots of different viewpoints. So let's just start with introductions. So Paul, let's start with you and Blue Module. Yeah.
You would? Okay. My name is Paul Wessels. I'm co-founder of Blue Module, and we create ESG software, so project and process management software to unlock the value of ESG within buildings and portfolios.
Super. Sebastian.
Hi, good evening. My name is Sebastian Kreutel. I'm leading the PwC real estate consulting business for our financial services clients. And ESG is one of the topics that I advise for my clients on, let's say, corporate level, fund and product level, but also on an asset level. From a strategy perspective, but also from a regulatory perspective. And I'm looking forward to discuss with the people here on the panel about what's going on right now at the moment.
Great, thank you. Max.
Thank you. My name is Max Riede. I'm head of ESG Germany at Swiss Life Asset Managers. And we have a strong commitment to ESG, to getting progress, to enable also our clients, our partners in getting ahead of the challenges we are facing. And for me, this is a good opportunity to get in contact with some interesting professionals, and I'm happy to share ideas with you.
Great, super. Vincent.
Hello everybody, I'm Vincent Bryant, co-founder of Deepki. We are a SaaS company that provides a SaaS platform to help real estate players to transition towards net zero. We have 260 employees, 330 amazing customers, and we operate in 40 countries.
Brilliant. Jan.
Right. My name is Jan Petr. I'm head of asset management for Schroders Capital in Frankfurt. That's the KVG business. And I think I hope I can bring a little bit of perspective on the operation side, as my responsibility is to implement the sustainability measures and everything from impact investing. So I'm very interested to be here today to get everybody to know and to get everybody else's perspective on it too.
Perfect. Thanks very much. Jens.
Jens Böhnlein, thank you very much. Commerz, we are a global investment and asset manager, and we're focusing on real estate, but also on renewables.
Great. Let's start with you, Jens, if we can. I mentioned already in the introduction that there's a growing focus around this. Are you seeing more institutional investor demand, I suppose, for responsible investment and picking up the impact side, social impact strategies or funds?
Yes. That's, I think, a clear yes. Especially institutional investors are much more demanding that the ESG topic is part of the overall commitment and part of the product. And we just see this across the globe, that there's a huge demand. Coming back to impact, we set up a fund like 2 years ago, Klimavest, which is investing only in renewables. It's an Article 9 product, as you would say, in the European perspective, and it has a clear impact vision. And this is a retail product, not an institutional product, but it's quite successful, and we see that investors are asking for the same type of products. So I think it's a clear yes, and we are all waiting desperately what taxonomy will give us from a social perspective as well if it comes down to impact investing, and I think there's another opportunity just down the road.
Well, let's pick up a little bit on the regulatory side. I mean, Sebastian, obviously that's one of your areas there. So what are we seeing in this side? How much of it, we've obviously got the push from investors, but there's also a push from the regulatory side.
Well, obviously there is, but the question especially is on how to operationalize then what is meant within the regulation. Because we still have a lot of white spots within the regulation, especially when it comes to SFDR, to disclosures of the fund products, when it comes to the harmonization of the, let's say, corporate strategy, the fund strategy, but then to decide what to do with the assets, what should be the focus of the strategy, what impact has it on investment processes, what do I have to check, what data do I have to, let's say, aggregate so it can meet the requirements that are promised within my fund documentation. And of course, well, the regulation gives you guidelines right now at the moment, but we're still waiting to see how especially the regulators, the BaFin, adapt then on it And we have a lot of discussions right now when we define things within the disclosure documents, within the pre-contractual documents, within the fund documentation, on how, let's say, BaFin interprets what was written, on how they put back questions, and how do you want to make sure that what you promise in the documentation is then operationalized. And that's something where we see a lot of our clients like working on right at the moment, to be sure that they're never accused of greenwashing because of the things they now want to do, which is pretty good. But let's say, to give you one anecdote, when we talk with our clients, I'm always asking, who are we writing this for, this disclosure? Is it because we have pre-contractual documentation for the investors? Or is it because we want to make sure that there won't be any lawyer taking this piece of paper and taking it back to me because I did something right but the wrong way? Yeah? And that is something where we work on right at the moment to get an industry standard on how to approach things and to make sure that what is elaborated works and is compliant with the current regulation.
Okay, good. And Max, I wanted to pick up with you. I mean, and I'll come to you in a minute, Jan, around that sort of operational side and how we actually implement it. But obviously, a big drive from regulation, as we know from investors, and Swiss Life Asset Managers, plainly, it's going to be a focus for you. But I guess, what are some of the challenges that you're seeing? Because it's fine having a strategy, but you've actually then got to roll that out.
Yeah, sure. So I think we find ourselves in the whole industry in this, let's say, in the time of implementing ESG. I mean, well, in the last 2 years, we've all been discussing if ESG is relevant or not, and we all agreed that it is relevant. And now that we're implementing it, we're finding out that it is not enough to kind of have one ESG manager in your company and then it's all going to be good. So we need to have a really strong and very systematic organization of the different roles in our group. And that's what we've been doing for the last, let's say, 2-3 years, to really build up a governance structure to organize that we have on all different levels the right people in place and have the structures, the processes infused with ESG. And I think it takes a lot of time. It's a huge learning project for organizations, and it takes courage for people to kind of still go ahead. Despite there's a lot of vagueness, a lot of fog around us, but still, I mean, it's not enough to talk about vagueness for the next 10 years. We got to be doing something, and I think that's important to include, people as actively as possible.
And Jan, let's pick up your perspective on that as well.
Maybe I would just add to that, because I think that's a very, very good point. I think the strategies centrally have been laid down, and people know what they have to do, and the big challenge from the operations point of view is implementing it on the ground, and that through the entire value chain. So not only at the asset management level, we're talking going down to the property manager, facilities manager, people on the ground who have the eyes and the ears and can see and can bring a lot of efficiency. Right now it's still a little bit underestimated. I think there's quite a bit of work to be done too with facilities managers, but we've at Schroders, at least, we spent quite a significant time at the operations level, setting up individual action plans for each property with very detailed steps on how to drive value there by implementing sustainability measures.
Okay, good. And Vincent, maybe picking up with you. I mean, the implementation part of it, I suppose, from your side, what are you seeing? What are some of the challenges there? And I guess, what are some of the solutions?
Yeah, well, what we discovered working with our customers for years is that we have some patterns that arise. It's interesting to see that we used to be several years ago to take care about this climate change topic and ESG, and now the industry clearly catch up in terms of awareness, and this is something which is almost solved. It's on top of the agenda for everybody, and this is absolutely great. This was for us the first issue. The second one is getting comprehensive overview of huge portfolios with so many assets, so many classes, so many different geographies. And it's not easy because a company used to spend hours, years, and a lot of people and efforts to collect data. Thanks to technology, thanks to awareness among the market, now it's possible, and thanks to players like us, of course, it's now possible to make it easier to solve this comprehensive overview issue. But the last point, I cannot agree more with you, gentlemen, is education. How make sure that things will be done afterwards? Because the purpose of ESG is not to provide reporting, even for SFDR. It is to implement things so that at the end buildings are less CO2 emitting. And to do so, it's not a piece of cake. And there's a couple of feedback, best practices we saw our most efficient or the fastest customers we work with implemented. The first thing is to have great ambitions and to communicate these great ambitions publicly and not only internally. The second one is to have baby steps to implement things, not to dilute and diversify too much into too many topics. You cannot go to GRESB for funds, CSR labels, and SFDR Article 9, and local regulation, and everything simultaneously. Companies that are very fast choose their fights. So they focus on net zero carbon and SFDR, for instance. So they focus on ESG with a lot of S in it. And it's very, very important. And the last but not the least is indeed to have strong resources internally, because we need ownership of this topic in your environment, your organization. We need money as well to make sure that there's enough resources, consultants and everyone around, asset managers, to make things happen. And we need also organization, dedicated organization. It cannot be a central ESG unit in one side of the company doing some compliance work. It has to be something that is held by the operational people. Right?
Okay, good. I just wanted to bring you in, Paul, if I can. Obviously, we've had some sessions on technology and also talked about the difficulty of finding the right solution, and that there being a number of them in the marketplace. How do people find the right solution? But also what role technology can play. It'd be good just to pick up from you, I think, how you see this part of it, and what element you're adding there at Blue Module.
Well, in terms of technology, I think the technology is there. So technology is not the problem anymore. It's like you said. I mean, what's your ambition exactly? And then putting your ambition into action, being very practical. And if you look at how to make it practical, standardization is very important. We talked about regulation. If you look at the standards which were developed by the market itself, like BREEAM, Fitwell, the GRESB standards, they are becoming aligned with regulation, I think. And they give a very practical step-by-step approach to how do you go about these projects. And that's where we can add value as a technology company.
Okay, good. Yeah, go ahead.
Maybe if I may add something to that, what you said, that technology is already there. I think in a lot of points we are already much farther than you would think, but then it is also again limited by regulation. For example, with the German data protection laws, for example. We had a discussion with a client, but the client said, well, we have real-time data with our monitoring systems and smart metering, so it would be easy to use the data we have to find out when do people enter the building, when do people leave the building, and then to steer heating, lighting in the building according to the need that is actually needed in the building. But then it starts where you have the discussions with the employers, for example, or with the workforce representation, where they say, well, if you do that, you can find out when the people enter the building and maybe also who enters the building, and can then derive how long are the people working each day. So they said, well, although we have real-time data and would be technically able to do steering in the building, we are now only allowed to use data points once a day for the usage of electricity or heating to use in the reporting. And there the question is, shouldn't this be considered in the future to be able to use the possibilities that we already have and to reflect it a little bit in the legislation we have. Yeah? Another thing would be the usage of photovoltaic on buildings in fund products and the tax regulation you have there that prevents you if you want to operate it yourself, where you have problems with the fund status, for example. So there's a lot of unharmonized regulation that if you would make it easier and if you would harmonize the legislation and regulation itself, that would make life easier for some people without having a lot of negative effects from our point of view.
Okay, good. Jens, just coming to you. I mean, you mentioned the energy part of it, and energy is obviously become a much bigger focus. But in terms of Commerz Real, I suppose, how do you see the social side of that? Because you've got to kind of build all of those things in together. There's the building, there's the sort of real assets energy side, if you like. So how do you put those all together, and how do you see that in terms of the social side of it, of actually making a significant difference to improve everything?
So we're talking a lot about data, and I completely agree that data is just an important requirement, but it's not the purpose of the taxonomy. And I think what we all have to understand, of course, we have to follow regulations, but the pitch is to make and build a better world. And if we talk about impact investing, what is the headline here today? Then the product should actually have an impact. And impact means, of course, that we are working on all different layers. It's the E, the S, and the G. We are very much focusing on the E right now. And personally, I believe that the E is very important because otherwise we are not able to improve the S as well. But the S, I think, becomes even more important to tenants in the future and just for the workforce that is facing the demand as well. And we have to come up with some solutions how to make an impact, very simply said. And this requires us also to think out of the box, right? Not only to think about my own building. We're always talking about how it sits into in a city environment. Yeah? We really have to think about how can digitalization and sustainability drive better places, better areas to live in, and what can we invest as an owner to make that work. We are not the operators at the very end. We are offering kind of a solution. We are offering the places, we build the buildings. But I think there's a change that needs to happen so that in order we, continue to have great cities as well. So, to stay where we are and have a great environment, a livable city, the S is a very important part, to make that work.
Okay, good. And I know you've got to leave in a minute, Jens. So
yes,
that's absolutely fine. When you do leave, that's great. It's been really interesting to get that, I think. Max, it would be interesting just to pick up with you, and I'd be interested to get what everybody else's view is on this. There's talk about different strategies for how an investor moves to having a sustainable portfolio. One of which is to simply sell all of the brown parts of the portfolio and buy shiny new ones. But that to me doesn't seem very sustainable. So I guess, what's the focus there, Max? How do you see that, and has it got to really be far more than that, and it's got to be about changing the nature of your own portfolio?
Yeah, so in fact, with the Swiss Life Asset Managers, we did not choose to sell everything and get the shiny assets in. But in fact, and this is also due to the long-standing history and also the identity of the group and of the company of being a long-term oriented company, in fact. So what we do is we focus on decarbonizing our assets, keeping the portfolio as it is, with, of course, normal transactions. But we are not selling it, and we are rather investing in it and making it greener, making it more CO2 neutral. Which of course requires a lot of money. We're investing 2 billion in the next 5 years into our own portfolio, so that's not the third-party money, that's our own assets. But that's not the only thing. I mean, it takes a lot of capacity. We all know the multiple crises we are facing currently, and one is the resource crisis, but also another one that we are not really labeling as a crisis is the workforce crisis, I would say. I mean, in the end, it takes an electrician to install a PV panel. and it takes many more craftsmen to kind of accomplish all our strategies. So we choose to invest in this as well and build up capacities in-house and really take on this journey of decarbonization instead of getting all these bad assets to another owner.
Great, Vincent, you wanted to pick that up.
Yeah, thank you. Regarding the strategy and your question, I would like to build on your point earlier. 20 years ago, there was this methodology called the life cycle analysis, and the point was to consider everything, all the dimensions of the fields of a given object, a given service, a company, and everybody knew, all engineers playing with that knew that when you try to increase significantly one of the criteria, it's very hard to increase others simultaneously. You always have, kind of balance, where if you start increasing a lot one criteria, you will decrease at some point another criteria. And I think this is the main issue with ESG. We need to make a choice. The European Commission and the European legal framework choose it. They said it's climate transition, climate resilience, and then try to do no significant harm on other topic. But I think that I would like to build on your point, because I think that S especially is more than just trying to do no significant harm. This is the main leverage to make acceptable the necessary changes we need to make in order to reduce our CO2 impact. Let's say, for instance, no more lift to climb a building, an office building, and let's make it funny and comfortable to use the stairs, for instance. And there will be many more opportunities to improve the S. In the resin industry, it's obviously to help people who have very poor buildings, the house, in terms of energy prices. It become completely disastrous for them. And if we can help people on the S, it will make other big investment, necessary ones, acceptable.
Because I have to leave in a minute, just a quick comment on this one. I completely agree, and I mentioned at the very beginning, we are doing real estate and infrastructure. And we strongly believe those two asset classes will combine very well in the future. And one of the solutions to provide the S is getting the energy for free into the buildings. And that's, I think, something we can easily do as a real estate industry. We just have to resolve some, let's say, tax regulations, some issues. But, if that's not the moment in time, then it will never come again, right? So.
Great, and thanks very much. Really interesting to get your insights, Jens. Thank you.
Thank you.
Did you want to pick that up?
I just want to pick that up because we're in that. I think in terms of social, if you're thinking you're looking at that, I mean, at Schroders, there's two ways of that we're looking at it. We can say, for example, outside of Germany, we have an impact fund where it's focused on, let's say, the rise of cost of living and the fact that there's going to be some communities that are disproportionately affected by this. So giving that opportunity, for example, to invest those through a fund. But I think looking at an asset level, for example, for us, we're looking at really small things also to change. So there's, if you look at the definition, what is social value? Or it's basically putting money or investing in something that has a positive impact on the communities or on society as a whole. So if you look at, what can you do at the asset level for that? First thing, maybe you could look at tenants who have negative impacts on communities. Those you might want to maybe exclude in the future. You might be looking at very specific measures, working with the tenants to increase the health and well-being of the workers there. I think this is the point that you were saying with the using the stairs instead of lift. So I think even if all the regulation isn't there, and I think we agree that there are no really standards yet to be able to define that, but you can take steps already to increase that social aspect of the ESG, and we're working on that every day. It's daily business.
Okay, great. I wanted to pick up a little bit on, obviously there's been a discussion for a long time about whether there's, brown discounts or not. But obviously it's going to come down for a lot of this to be brought in. Yes, of course, there's goodwill and there's capital there, but ultimately there's also got to be a return on that investment. So Paul, I suppose from your side, if I notice on your website, which I'm just looking at now, it says ESG software to increase the value of sustainable and healthy buildings. So how, when, where, how does that happen?
I think there are many sides to that. If you listen to the investors, also here at the table, they want to invest in ESG-proof assets. So, and that's not only the case in real estate. That applies for the whole economy. So that's one thing. So So if you look at the yields for ESG-proof assets, they are better than brown assets. That's one. Then two, the tenants want it, especially in the office market. If you look at the big tenants, they have their own ESG policies. This also applies for the residential market, especially in the top of the residential market. And then the third thing is regulations going up. And that is also something which has an impact on the value of, for instance, assets who don't adhere to Paris proof. If your asset is stranded, I mean, you get a discount. So there's a huge impact on the value of assets who are not ESG proof.
And
in my opinion.
Yeah, and are you seeing more of a focus on that? Reinhardt agrees, that's good. Are you seeing more of a focus on that and also the social side as well? Vincent, what's your sense of what you're seeing from, I suppose, the occupiers and the investors?
Yeah, I cannot agree more on what Paul just said. Actually, what we start seeing is customers that integrate into their business plans these brand discounting things, and there's no one methodology today for the whole market. There are many different, so it can be carbon price, it can be carbon ETS, it can be discount on the value. If your asset's worth 100 million euros and you have to invest 20 in order to put it into the right pathway. Obviously, when you are a buyer, you don't want to purchase it 100. You want to purchase it 80, of course. And we see more and more interest on that matter. And this is great because at the end, it will make. I don't know if we will have green premium on assets, but for sure, it becomes a goal to protect the value of the assets. I mean, you see that, I guess.
Did you want to pick that up, Max? Or?
I can, yeah. I mean, we definitely see this as a very important point to discuss, and it can increase the value of the asset. And we're looking at these criteria in every transaction. In fact, every asset that's been bought is really strongly assessed from an ESG point of view. So it's really also, of course, a perspective that needs to be taken into account. And often, you find yourself in discussions. How much is ESG? How much does it cost? Is it really how high are the fines and so on? And I think it's a difficult question to provide an easy answer, and I think it pays off. And there are several proofs to see that it pays off.
Okay, good. Yeah.
I totally agree to what you say, because we have exactly the same discussion with the clients when they think about the ESG strategy, and then they start to ask the question, well, if now I put up a sustainable fund, how much will it cost me, and how much will it cost the investors, or how much of a discount in returns will you get? When we put the question around, say, well, how much does it cost you if you don't consider it today and you want to sell the building in 10 years and you have not thought about sustainability? There will be much more discounts than what it costs you today to think about how to make the pathway of the real estate asset in a way that it works in a sustainable manner in the future. And maybe to add to that, when we talk to the clients, especially what you said, is that is it sustainable to buy fancy new buildings that meet ESG criteria, or from an impact perspective, wouldn't it be a lot more impactful to buy rather older buildings and to renovate them and bring them on a path, let's say, that they will be more sustainable, like a managed to green approach? And what we see also with the first Article 9 impact real estate funds is that they exactly want to go that approach. But right now, at the moment, if you talk to potential AIFMs to set up such a strategy, I would say 9 out of 10 do not want to do it, because they say with the current regulatory environment, we cannot guarantee to meet what we would like to focus on, to have an impact fund. And right now, with the investors demanding just sustainable products, no matter whether it's 8 plus or 9, the let's say, the pain is not high enough right at the moment to set up these Article 9 products. And as long as the investors... Pardon? Well, it will come. The question is when and how to react then to it. Yeah? And I'm looking forward to what we are talking about when we sit here again, maybe not next year, but the year after that, and think about how will it evolve when the EU has a look at the achievements we had with the targets they set forth, and they find out, well, what we are currently doing, especially as a real estate industry, is not enough, and they set up new goals that will then have to be reached.
I think there is, you mentioned it in the last one, Reinhard, and I think there is an interesting point about resilience, which we'll touch on very briefly, because I think there is much more of a discussion around physical resilience of each of those buildings, and obviously there is a big focus with the ULI and others around what we do, because absolutely there will be sea levels rising, there will be climate change, and that will have an impact on the built environment, and resilience of those buildings will be one of the key things. I mean, you're on the asset management side there, Jan, so is that a focus for you?
Yeah, I would say definitely. Maybe 2 points on that. I'll start with the second point. So on the aspect of resilience, we are looking at, because we're working in the KVG business with existing buildings, and of course our goal is not to just get rid of them and then buy new shiny ones, where our goal is actually to improve them. And one of those is obviously the physical characteristics. So we've spent a lot of time going through using energy audits, looking at very detailed how those buildings function, how to make changes. We've did climate analysis at the same time, that point that you spoke about, even though it may not affect every building in Germany with rising sea levels. But hence we still look at it very detailed, how we can make those improvements. We've accounted for those too as well. We've accounted for the rivers. That was the first point. The second point was on the healthy planet, healthy living. I think that's a very excellent point. I mean, he touches one on the social aspect, but I think it comes down to what we're doing right now is having dialogue with our tenants, which is very important on the aspect of people who are actually in the building. How are they doing? Those are usually, for offices, employees of tenants, or for retail tenants, customers. And of course, that first priority, healthy well-being, healthiness, is what we're looking at as well. So having that dialogue and trying to figure out what is the priority for the tenant, what's the future thinking along the lines with sustainability. So that's one of our approaches that we use. We kind of borrowed that from our hotels group. We call it the hospitality approach. That means understanding each asset as a business itself, and understanding that sustainability is a very big part of that asset. So that asset, but not only in terms of the entire building. I'm talking in terms of the business of the tenants too. So that's going to be, I think, a very important point, and that's going to help drive those key points: healthy, well-being, and making those improvements.
Okay, good. Yeah, did you want to pick that up, Max?
Yes, I very much appreciate your Alpine perspective on the topic. I've lived in the Alps for 15 years myself, so I know that it's a good place to live, but also remember the temperature increase in the Alps is far higher than around the Alps. But the Alps provide very important eco-services for the subalpine area. So we live from the water that comes from the Alps. So this water is actually Austrian. And I think actually the resilience perspective is so important, and many of us, I think, experienced it ourselves this year. And I think the top risks in Germany, for example, is definitely drought, heat waves, and heavy precipitation. And heavy precipitation is one of the most difficult things to forecast, to really understand the patterns of these very strong amounts of rain with a potential damage for our assets. But I'm positive, because I think our industry, especially asset managers, investment managers, have a strong track record in risk management. So in fact, we have to make use of this history of risk approaches to this topic, and then in the future maybe have the same KPIs as CO2 or energy efficiency for resilience aspects as well. I mean, we have some already, but this matter is by far not developed as it should be.
Okay, we've gone slightly over our time, which I'm very aware of, because I need to finish But I would like to ask this, which is, and this is for everybody, and we'll start with you, Paul, if we may, which is, where is the biggest opportunity that you see for making a positive impact? Let's say, let's take the horizon that Sebastian mentioned there over the next 2 years. Let's start with that.
The biggest opportunity. Okay.
Yep, to make a positive difference.
I think because of the spiraling energy prices in energy savings, so that's a no-brainer.
Okay, great, Sebastian.
Yeah, I would say in addition to that, in the existing buildings, and to think about how we can use them in the future, obviously, like tearing them down and building them new emits more CO2 than like investing in them. But of course, it has to be differentiated, and not every building is suitable for, let's say, optimization. Let's put it that way. But I still think, just as we said, as you said, there's more than 70 buildings, 70% of the buildings are old, and that is where, from my point of view, is the biggest impact to think about how we can work with them in the future.
Max?
I'd agree. I'd go with Paul and say, I mean, energy efficiency, especially in these days, is something where you can have an impact on the E and on the S, because it makes affordability reality, or it helps to make this real. So I think really, I mean, if you look at most of the existing buildings, there's so much potential with clever technology to make really no regret measures and save some energy that is wasted instead.
Okay, good. Vincent, it seems as though energy efficiency is a good bet at the moment.
Yeah, I cannot agree more, actually. However, let me challenge it a little bit. Not because I don't believe in it, of course. Energy efficiency is a key factor. But you said over the next 2 years. And there's not enough resources, not money, but not enough qualified staff, qualified companies to implement significantly energy efficiency the way we would like it to be implemented. However, within the next 2 years, I think that asset managers and investors have the opportunity to figure out what is the part of the portfolio which is at risk and what is the part which is not, in order to focus efforts, money and time at the right place at the right moment to implement energy efficiency.
Great. Jan?
So, I would add on to energy efficiency, but in a slightly different way. I would say that I think the biggest opportunity is just adding value, and that may be with the aspect of energy efficiency. We don't really know in 2023-24 how the energy market is going to move, and if we go back to where we are maybe a year ago or so or not. But I think adding value in sustainability, working with tenants. So something that I mentioned before, working together with them to making their business more sustainable, and adding value that way to the asset, looking at a very asset-oriented level, which in turn helps add value to the investors too. So I think that's where locking that potential up, and it could be through energy efficiency, but I'm thinking more the whole package of sustainability, working with the tenants, making sure that their business is right, because when that business is sustainable, the asset is going to be sustainable as well.
Great, really interesting. Thank you for that.